DB advisors have described the year ahead as an investment odyssey. That's a very striking phrase. So what's the direction now for investment management?
Well, since the financial crisis in 2008, a number of fat tail events, the sovereign debt crisis, for example, the catastrophe in Japan, turmoil in MENA, have unfortunately led to increased volatility and damaged the rebuilding investor confidence that was just beginning to grow in the first months of this year. Now, in a low interest rate environment where it already was challenging for investors to earn a sufficient income to match with liability requirement, it needs courageous timing and investment decisions to achieve a satisfactory investment result. Our belief is that equities and real assets will continue to outperform in such an environment where liquidity is immense and upcoming inflationary trends, plus uncertainties and worries how the fiscal deficits in many countries can be solved, are increasing.
So DB Advisors is an asset management firm focused exclusively on meeting the needs of major institutional investors. What are their concerns and needs at the moment?
The major concerns currently are increasing inflationary trends, as I just mentioned, caused, of course, by the Fed's quantitative easing program and repurchasing programs by the ECB. Rising interest rates, of course, on the short end, as we've just seen by the ECB, as well as, of course, along the yield curve, and major changes to the regulatory framework as well. The conflict to cope with long-term return needs under stricter regulatory regimes is ever increasing. A holistic approach to risk management is therefore of utmost importance, which allows investors to benefit from existing opportunities, but in a controlled environment with a clear definition of a risk budget per strategy.
A big question, how do you think the asset management industry has changed in the wake of the financial crisis post-Lehman?
There are numerous lessons learned since the financial crisis. Obviously, liquidity requirements have become more important than before, when many investors and consultants believed that diversification alone will somehow ensure that at least parts of the portfolio can be easily liquidated if need be. That has changed some of the guiding principles for asset allocation. Clearly, risk management in every aspect along the value chain has grown in importance. And finally, transparency requirements for the investment industry have become even more important. The need for us as an asset manager to act as a true fiduciary and fully understand the client requirement in the first place will lead the industry to a more solution-oriented approach rather than to continue in a purely product-driven manner.
So looking at DB Advisors in more detail, one of its distinctive features is the global research platform. How does that work to the advantage of clients?
Our investment process is based upon an independent idea generation from investment experts that are located around the globe. These analysts provide uncorrelated alpha signals, which are communicated real-time through a global proprietary system platform. Through a rigorous process management, where of course risk management is an integral part of, these signals, together with a highly customized blueprint for each client, allow us to construct portfolios with higher risk-adjusted returns.
Let's stay with the subject of risk management. What's your approach?
Well, risk management has many dimensions for us. Firstly, of course, DB Advisors is an integral part of the Deutsche Bank's risk management framework. That means that operational and market risk, counterparty and liquidity risk are closely monitored by an independent risk management function with a strict governance structure. Secondly, as I described earlier, risk management is integrated in our investment process in order to achieve high risk-adjusted returns. Thirdly, and that has been one of our success factors through the last 2 years, we offer a very strong and market-leading risk overlay solution for our client base. This solution is based on a proprietary front office system, which replicates the underlying benchmarks of a given portfolio and constantly calculates and monitors individual risk budgets per segment or predefined value at risk of the portfolio. This setup allows investors to take advantage of dedicated alpha specialists on one hand, while allowing them to independently operate within their given investment guidelines, fully leveraging their expertise, and at the same time manage the overall risk of their portfolio and control it.
You keep a close eye on environmental, social and governance issues. How do they integrate into your work?
We have started work on sustainable investing many years ago and are currently engaged in many initiatives on that. Together with our colleagues from the mutual fund company DWS, we have established an advisory panel comprised of academics as well as industry experts back in 2007. This work was used to establish ESG principles in our investment process. Meanwhile, DEAM has signed the UN PRI, and these guiding principles have been implemented not only in equity products, but also in the multi-asset and fixed income space. We do not see any disadvantages while managing under ESG criteria. On the contrary, performance in many products has been superior, clearly outperforming the benchmark. Now, with the creation of the stocks indices for sustainable investment just recently, we believe a whole new range of products will emerge. DB Advisors just received a AAA- rating for its ESG corporate credit strategy, which already shows a strong track record, and we have just been mandated by a pension fund in Germany to manage an emerging debt portfolio under ESG criteria.
Michael Fuss, thank you very much.
It was a pleasure. Thank you.